Hey friends, it was November 1st, 2025. And just when you thought it was a normal weekend in China, boom, Beijing just stabbed its own citizens in the wallet. The crime? Loving gold too much. While Chinese aunties were loading up carts for Double 11 sales, which is Chinese version of Thanksgiving sale, and young people were showing off small gold bars and jewelry pieces on social media as a safer way to save. The Chinese Ministry of Finance decided to pull a fast one out of nowhere. Overnight, they quietly scrapped a key tax deduction on gold, basically making every single gram more expensive. Translation: if you're buying gold in China, congratulations, you just became Beijing's latest bailout plan for its collapsing public finance. Now, this is not just a policy adjustment, it's financial sleight of hand. Beijing didn't raise the VAT rate. No, they did something sneakier. They removed the deduction. Before November 1st, 2025, companies that made or sold gold jewelry in China could deduct the value added tax, VAT, that they had already paid when buying raw gold. That meant they were only taxed on the value added, basically their profit margin. That is how VAT works in most countries. It prevents being taxed twice on the same product. Now, Beijing just removed that deduction. So, businesses must pay VAT twice. Once they buy the gold, and again when I sell it as jewelry. Let's say a jeweler buys gold for 1 million yuan. They used to pay 13%, which is 130,000 yuan in VAT, but could later deduct that. Now they can't. They will pay extra taxes when they sell the gold as jewelry, on top of the VAT tax they already paid. So that's double taxation. And the result is that gold jewelry and products in China instantly become about 13% more expensive. That's not regulation. That's daylight robbery with paperwork. They'll call it policy optimization. But let's be honest, it's a disguised tax hike on the last honest asset left in the Chinese economy. You may wonder, why now? Well, because they're broke. For years, China's local governments lived like drunken landlords, selling land use rights to fund everything, from vanity projects to white elephant stadiums. Now that real estate has imploded, that ATM is gone. Land sale revenue in major cities is down nearly 50% this year. What about the hidden local debt? 100 trillion yuan, 80% of GDP. The Ministry of Finance is in a panic mode. find the money, anywhere. So they looked around and saw something shiny: gold, a booming market, easy to tax, emotionally important to the people. Perfect target. Because gold in China is not just metal, it's face. When a property market collapses, when the Chinese yuan keeps losing value, when savings yield nothing, people turn to gold. And that's exactly what Beijing cannot tolerate: financial independence. In the eyes of CCP, buying gold is not financial prudence. It's ideological disobedience. It means you don't trust the propaganda, the GDP growth numbers, or the miracle economy narrative. In authoritarian China, even owning gold has become political. It's the new crypto. It's shiny and it's legal, but spiritually subversive. And that is why the Chinese state banks suddenly restricted gold accounts. Not because of risk management, but because the state fears losing control over yet another escape hatch. When citizens hedge against collapse, Beijing calls it unpatriotic. So what we are seeing here is CCP's war on real money. From property to crypto to now gold, Beijing has systematically destroyed every outlet for ordinary people to preserve wealth. It banned crypto. It crushed property speculators. Now it is taxing gold, the oldest safe haven known to man. Why? Because gold is dangerous. It is tangible, waterless. And worst of all, it represents freedom. When people buy gold, they're saying, I don't trust your funny money. This Chinese yuan is losing value too fast. Look at the exchange rate between yuan and the dollar. And Beijing can't have that. So it's waging war on real money under the banner of market reform. The victims are not the speculators. It's the ordinary people. Small jurors in China, their margins are barely 5%. So a 13% tax wipes them out overnight. Consumers priced out of even small gold savings. And the Shanghai Gold Exchange, once China's pride, now loses credibility as both volume and liquidity dry up. This new tax is turning Shanghai's gold market into a hostage zone. On day one, Chinese gold traded $650 per ounce higher than London gold. That's, more than greed, that is desperation. Beijing is suffocating under debt, deflation, and collapsing confidence. The property bubble is dead. The stock market is broken. The Chinese yuan is sinking, and foreign investors are fleeing. So, what is left to squeeze? The people. China's gold tax is the fiscal version of drinking poison to quench thirst. A short sugar high, a short-term, sugar rush of revenue at the cost of long-term credibility. And make no mistake, this is just a test. If Chinese people stay quiet, Beijing will expand it because they're desperate for revenue. So, property tax, inheritance tax, capital gains, none of them are off the hook. And the message is clear. In China, your wealth is not yours. It's a public resource. And you will be reminded of that every time you try to save it. So this story is not just about gold anymore. It's about a system that has run out of both money and imagination. When governments lose control of their public finances, when they're in the middle of a fiscal collapse, they tighten control over their citizens. And when I start going after gold, the world's oldest symbol of value, that is when you know they're taxing the last bit of faith left in the system.